Hello, everyone. Happy Sunday. Simon is here with AvaTrade, and we're back to our weekly webinar, your weekly trading plan. I want to welcome everyone, of course, and a special warm welcome to the new people. And for those of you that are new to our webinar, the title says it all pretty much. And the whole idea, as I always say every week, is to create a plan. You plan your trade, then you trade your plan. This way you can avoid a lot of chaos, a lot of impulsive trading, a lot of issues. And even with the plan, there are no guarantees, of course, but it creates structure and it gives you peace of mind, it gives you direction, and you're ready for your week, you're ready for certain events, you're ready for certain scenarios, and you have a plan in one word. Okay, so a few things about myself. Simon Friedman, that's me. I'm a senior account manager with AvaTrade. I've been involved in trading for over 22 years. I started in June of 2000 when the market was falling. I started as a proprietary trader back in New York City. I worked in a few proprietary firms, and I did it for about 11 years, and then I moved from intense day trading to a different way of trading, and started to mentor and educate other traders. And currently, as I said, I'm a senior account manager with AvaTrade, and I try to do my best to help other traders succeed. The agenda of the webinar is usually the same. We'll go through indices, some stocks, some commodities, and Forex. And of course, these are the ways of follow us on Twitter, Telegram, and my favorite YouTube, where most of you are probably watching this on YouTube right now. And as usual, I want to encourage you to subscribe. Don't forget to put the likes if you really like it, and share it with your friends, of course, so we can grow. And of course, you find a lot of information there, educational information. You have tutorials, you have webinars, a lot of things. And if you click subscribe and you click on notification, you'll be notified when things are coming in, and it's being updated on a daily basis. And before we go further, of course, the risk warning, you can find the full statement at our website. And the idea is really to use your own judgment in your trading. This is just for educational purposes. I found this cute picture. I thought it was cute. And I suggest you can read this. It's an article on MarketWatch. This is the title here, 5 Reasons Why Buu Run in Stocks may be about to morph back into bear market. We have a cute picture when the body of the bull unzips, and the very cute one actually coming out. Again, you can read it. I'm not going to go into details, but they give reasons. Some defense sectors are high, bond yields are rising, dollar is rising, cryptocurrencies are falling, and so on. So you can read this, and of course, it's good to prepare yourself fundamentally with the news and everything else. And I want to share with you my experience with the news and fundamentals and everything else. I like to be aware of what's happening for a very simple reason. I want to know what the public knows. It helps me understand better why things are happening. And a lot of times the fundamentals work. Also, it's a 50-50 thing like everything else in life. Sometimes the opposite happens. But I want to know what the public thinks and what could be a scenario. It comes with the experience. I try to kind of think what the crowd is thinking by reading certain news and so on. So I suggest to you also, if you can, follow the news. It's very, very important. So this is the picture. You can read the article, just Google it, or you just go to MarketWatch. You will find it there. Now, before we go into economic calendar, I'm going to leave this picture on. A few things. Usually, I start with big picture, what's been happening. And again, I hope I will stop saying this, but for now, the war is still there. People are still dying. a lot of issues there that creates chaos in the region, and it affects everyone, not just in the region. If we speak about economics of it and geopolitical effects of the war, that includes energy crisis, the prices of oil, natural gas fluctuates, and so on. So unfortunately, things are still there. Now, this week, on the 24th of August, that's the Independence Day of Ukraine, and that's what happened in 1991. Ukraine announced independence from that's when Soviet Union collapsed in August of '91. So I hope nothing terrible will happen, because there were a lot of threats from Russia and so on. And just to keep that in mind, and maybe send our prayers to that part of the world. Now, as far as the economic calendar goes, we'll go and take a look in a moment. We have interest rate decision from China. As you know, last time there was a surprise decrease. On Tuesday, we have PMI from Germany, European Union, and UK. Wednesday, we have US numbers from durable goods and retail sales from New Zealand. Thursday, GDP from US, and this is very important. I guess it's a two-day symposium, Thursday and Friday, and Powell will be speaking, it looks like, on Friday. It's 3 days, it says here, Saturday as well. Anyway, this is the annual event, and they start doing it since 1978, and it's being done in Jackson Hole, Wyoming. And basically, the Feds are talking and discussing the topics of economic policies and everything else. And of course, the chair usually speaks at those events. So it's important, and we'll probably hear from analysts and commentators what they think and what they expect, and what after the fact, what was the speech about. And again, we had FOMC minutes reported last week as planned, and there were mixed messages. Some took it as hawkish, some took it the opposite, that maybe less will be done as far as the increases, and the market reacted one way then another, and we'll see in a moment. Overall, the week was to the downside. It was a strong sell-off on Friday, and we'll take a look at in a moment. So that's the economic calendar. Again, I'd like to repeat myself again. Important to know what events are coming out in economic calendar. You can filter it. What I do here, I'll take out only the high impact. There are more events, of course, with medium impact and low impact. It will take a lot of space for me, but for you, I'd suggest that you can filter them and you can look for something that's relevant to your trading and to the markets that you're watching. Let's move on, and we'll go to the MT4 right now and start taking a look at the market. So this is S&Ps. Again, for the new traders, S&P is considered to be a major indication of what's happening in the equity markets globally. So if you take any trader trading any part of the world, they want to see what S&Ps are doing. It's a collection of 500 stocks with the different industries, and to show general situation, what's happening in the market. So as you could see here, we have the first week after the 4 nice weeks to advance. And if you remember, I mentioned to you last week that 4302.75, around 4303, we're going to face strong resistance. And again, I'm not predicting anything. I'm not pretending to be a genius. It's just my experience and simple observation. And if you remember, I connected that level to few things. One of them, this was spike from which we start selling off, and the high here was 4302.75. So you could see here. So if you could see, this week we went a little bit above it. One of the days that was on the 16th, and then It was a freight breakout, which was very strong. We went as high as 4327.75. We went about $24, almost $25 higher than that resistance. And the very next day, we dived below it and we continued to the downside. Again, just to say it again, the levels are important. They tend to be repeating themselves. As here, take a look. That was the weekly thing. On the daily chart, this was the May 4th, the high, and from here we sold out. So we did the same thing here. Now, what's next? Good question. Nobody will give you the answer. Logically speaking, it looks like the panic is coming in. You can browse through things. Even CEO of Goldman Sachs is warning the big customers that something worse than recession is on the way. I didn't read the whole article, but you can just Google it and read it. A lot of pessimism is boiling up, and of course, what I mentioned in the beginning, you have the bond yields are growing, the dollar is getting stronger, and so on. So again, indices. Let's start with China. China tried to move out of this range. We came above, we traded a little bit higher, and then on Friday, we closed at 13,537.5 below our level. And again, I draw the level by few points, and this was the one from which we started a strong move higher. The low here was 13,555. So we're below that level. Again, China COVID issues build up in the financial sector because of the projects the developers are running or getting out of business and defaulting, and people refusing to pay it. Some predicting it's going to be a 2008 Chinese version of it. That's what happened in the States in 2008 with all the flipping and defaults on mortgages. So China is looking down. Let's take the same region. The Japanese market was very, very strong, and Friday was a big sell-off. We erased 3 days, almost 4 days of the move to the upside. Even Nifty. Every time I laugh about it, not to diminish the economy in India, I really don't know what all this was based on. And you take a look. In 1 day, just we erased 5 days, the whole week in 1 day erased, and probably will continue to the downside. So European indices, that's Japan, French, UK is actually the only one that is stayed. And I'll repeat it again. In my opinion, it's the only truthful picture here. And again, for those of you the first time, I just want to explain why we never went crazy move high. This is the drop on the beginning of COVID, and only recently we went above it, but we're still facing this resistance at 76.21. We never went robustically high as we did here. Take a look. This is S&Ps. Okay, weekly chart on S&Ps. This was the drop of pandemic. We came out of it 5 months later, and a little bit of accumulation here, and then we just went super duper high for whatever reason. I'm not going to discuss it now. I'm not going to say my opinion about it. So now some articles, they actually saying that the technicals here showing similar to 1929 when market collapsed. They said also it was move higher, there was move down, a nice correction that pulled everybody into a rally, and then we sold out to the lows. Everything is possible. So that's the S&Ps. This is the Russell 2000, the mid cap. Also giving back a lot of gains that happened recently. And Nasdaq was the weakest. The sell-off is not, and Nasdaq was the strongest out of 3. Just move this. So S&Ps, as you could see, we are below 200 moving average on Friday. Nasdaq way below, and Dow Jones is holding the strongest. We are still about the 200 moving average. Again, just to put it all together under one umbrella, it's a downside pressure. Again, you saw me mentioning Thursday, Friday rule. If Thursday is higher than Friday is higher than Thursday, the market, Monday continuation happens. That's what happened last week, and this week the opposite. And it's also a strong sell-off on the higher volume than the previous day. So possibly, potentially, Monday will be continuing the same trend to the downside. So that's it with indices. As far as stocks, we have a few stocks reporting this week. MT4 doesn't have them. So those of you that trade MT5, there's a big collection of stocks. By the way, if you are an MT4 and you are interested in trading more stocks or CFDs for the stocks, for that matter, MT5 has a larger collection. So NVIDIA reporting on 24th, Dell reporting on 25th, and Tesla is, as I mentioned to you, they announced they got approval by the shareholders to the 3-for-1 split, and the split will happen on the 25th of August. So that's on Tesla. Now let's just browse through stocks really quickly. Walmart, recently this move was on the good income, on the good reports, earning reports, but we are looking down there. I mentioned to you last week Tesla stock, and I said that the target is set 13, and it might be that the sellers will come in and push it lower, and actually that's what happened the last week. We came, we tested the previous resistance, and it looks like support is here. So that's Tesla. Disney also, it was a gap on the good earnings, and the last few days is sold out. Netflix is holding to these levels. It didn't break through, as I mentioned to you, that the bottom of the gap. We're gonna test that level. We did, but we didn't move higher. We didn't sell off either on the selling on the market. So something is cooking here in Netflix. We'll be seeing it in the coming days. Uber, after reaching the resistance that I mentioned to you, is really selling with the gaps strongly. We came from almost $33 to 10% move in a week to the downside. Intel still sitting at the bottom. Even Apple sold out on Friday, of course. That's what I tell you all the time, that on the selling market, even the best stocks are going to be selling. So Apple started declined move, and if market going lower this week, Apple might follow with that. Amazon, the same thing. Google, and the chart shows it in a weird way as well. So pretty much the stocks are looking down, and of course that's the reason the indices are down. So let's see if this week will continue, and let's see what Friday will bring as far as any news, any specifics from Powell as far as the next moves in interest rate and the policies. Okay, so that's as far as the equity markets. Let's move to commodities, and we'll start with oil. Crude oil found the support around 86, 85 levels, and on Thursday we moved about 89. We touched 91 and a few cents, and Friday we broke higher than the previous day but closed lower. So we are back in this channel between 89 and 93 and a half. Again, geopolitically, we'll see what happens. We'll see if there are any news on production side. If the market heavily continues selling, we might dip below this level and continue to the downside. We'll see what happens. Now, we spoke about natural gas, and we said that natural gas will be revisiting this spike over here, and the high here was 940. Beautifully, we started the week exactly to the highs of 940. The following day, we had a spike above, closed lower, another spike, closed lower, and then Friday, it was pretty much a spiking day, but open and close were really next to each other. So we are officially holding the 940 resistance, and that's what's the plan. And of course, those of you that try to short around this level and catch it lower had a nice opportunity there. Of course, some that tried to do it probably got stopped out around these levels. As you could see, a lot of volatility, and it has to do not just with the economic situation, but geopolitical and supply of Russian natural gas to Europe. That's why I said in the beginning that this war is really affecting everyone. So, so you could see the spikes here. So that's on natural gas. Gold was selling off as yields getting closer to 3%. Just to remind you, we are in the channel between 271 and 3%. And as the yields going higher, the gold is selling and the US dollar is getting stronger. So as you can take a look, we're in the channel here between 1760 and 1792. And the whole week was slowly selling, but very strongly. We had the low of 1745.48, and we closed $1 higher. So a lot of pressure to the downside that might continue. Should we reach the 3% on the yields and higher, the selling might accelerate. And you can see that we are below all the moving average on gold. So that's on gold. Copper, let's take a look what copper is doing. Copper is holding this level. Okay, as we said, the China trying to get out of the crisis might affect copper to the upside, and also selling on the market in general on the equities on Friday didn't push copper lower. So it looks like the buyers are here, but again, for copper to have continuation to the upside, we need to be out of the woods, but on this level here around 370. And if we are, we might continue higher to retest the 100 moving average and even 399 or $4 level high here. And of course, if China collapses and general global markets will sell, we're probably going to retest to the downside, the support around these levels and continue lower. That's the opposite scenario. So that's the copper. And I just want to bring your attention to wheat. I mention it every week. It's a sensitive topic. And it is being affected, of course, by the war. Just to remind those of you that are not aware, there was still a lot of grain being stocked in Ukraine that Russia wouldn't let out. And in the past week or so, there was the agreement put together with the Turkish president and UN getting involved, and they started to release product. So if you could see the 3-day sell-off happened on Wednesday, Thursday, and Friday of the wheat, we got below the channel. And I mentioned last week that we are having a nice build-up like we did here before the move, but here the beginning of the war caused this robust move to the upside. Now on Thursday we dipped below very strongly, and Friday it was moved to the upside, and we closed at 753, right on this level of, in this case it was a support, now it placed a resistance. So we need to be back in the channel, maybe build up a little bit more and then break the 800 to the upside, and that would open the space for a nice move to the upside. Otherwise it's still early and we might go lower. Just to bring the monthly chart, take a look. This level is very serious. These are the moves with the war. We came right back. So we're sitting on the key levels, and we'll be watching in upcoming days and weeks. Again, if we're coming back to the channel, continuation building up and move about 800, that would signal probably of the buyers to push it higher. So that's as far as commodities. We finish and we're moving to Forex, and we start with dollar index. We spoke last week that if we break out of this level 106.5, we're going to have a continuation and possible retest of the highs, and that's exactly what happened in the past 3 days. Right, a nice move to the upside. Again, the yields on the 10-year bonds went higher Gold went down, dollar had a nice move to the upside. And we'll take a look at the majors in a moment. And one of our visitors requested to add GBP JPY to the list, and I did, but I'll explain why. I'm not going to be talking about this. You know, if you see something with the tails like that, it's a super high volatile pair. Okay, even you could see by this, by in general, I can say in general what I think about it, and it's hard even on the monthly chart. Take a look at these tails. It's very hard to trade it. Okay, and that's the reason you probably like it, and I don't blame you. Something like this gives you, with the high volatility, gives you nice ability to make money. At the same time, it increases the risk. But in general, it's very simple. You take a look. You go left all the time, so I'll just explain so you can make your own analysis. Here, we started the move to the downside. We came right back, and take a look at how after all this move, we came right back and we created another proof of this level right here around 162.94. So let's say 163. Then we sold again. We came all the way down to the bottom of the seas, and we established a few things. And there's a reason I'm telling you this story. And after all these spikes, up and downs, we came back to this level. So over here, that's the reason we have this volatility, because this level could make it or break it. We can break out of it, let's say 163. If we break above 163, we might continue to the upside, but it looks like we're holding this level as a resistance, and we might continue to the downside. Again, like I said, if you see this style, this type of candles or bars, if you look at the bars, it's very hard to trade. Even if you take a look 1 hour chart, take a look how many spikes. You know, if you have your stops in place or take profits or whatever you do here, you're going to be in and out on these spikes. And I hope that helps what I share with you now. So let's go to the majors. So we said dollar index is on the way to probably retest. And again, this level was established at 109. 109.12, and that was 14th of July, about 5 weeks ago. So we can easily retest that level. Now, euro is back to parity after this attempt to get out, and there's a reason. Remember, I told you, even if dollar was weak, euro had a really hard time breaking this level here, 102.61, and there was a fake move out, followed the 2 days after right back into the area and to the downside. So euro is weak, pound is even weaker, and the same thing, we're retesting the lows. Very, very crucial area here. If dollar, take a look, dollar didn't reach that level yet, right? I'll just put this level here, 109.12. But euro is almost there, and pound is actually it's been there. So super strong sell-off on pound and euro. New Zealand dollar straight down. Australian dollar straight down below all the averages. Dollar yen, very interesting point. Take a look. We had the fight here. We had established support, then resistance again, and we're back at this level, and that's 136.83. Okay, so we'll be watching it. Yen is a very tricky one, and it's very sensitive, of course, to the yields. Yen sold out heavily, and the dollar got stronger, so it's a double impact, and the dollar against the yen was very, very strong. Now, dollar Swiss also strong. We're approaching the 50 moving average here, and USD CAD also had a nice move to the upside, and we are retesting the 130 area. Okay, so that's again, we'll be watching what dollar index is doing in general. We'll be watching what the yields are doing on the 10-year bonds. Like I said, we're in the channel between 2.71 and 3. If we break to the $3, will go through the skies, gold will sell out, and of course the other currencies are going to sell against the dollar. So that's as far as the Forex. And let's take a look before we go. We'll take a look at the famous Bitcoin and take a look how sensitive it was. That this was the sell-off in the market. It just sold down, sold out. We tried to break out of it, and I mentioned to you, in order for it to go higher, we need to break 25.5. I think we touched 25,000 briefly. Yes, we did right here on the 15th. And the sell-off on the high volume was much stronger than the moves. You see all the small candles slowly climbing and slow, and then one day just straight below 21,000 on Bitcoin, and Ethereum also back to where it started the whole move here around 1500, right? We're at 1527 now. So that's as far as a cryptocurrency. So I want to thank everyone for coming, and I hope that this was helpful. And I want to wish everyone a great weekend, whatever's left. Get some energy, get some power, stay healthy, stay happy, and get ready for the week. It's going to be a very interesting one. As I said, Friday was a very strong sell-off in the equity markets, and we might start Monday in the same mood with continuation to the downside. All the best, stay positive, and we'll be back next week. Take care.